Here's a brutal truth most traders never want to hear. The skills that made you profitable with a $1,000 account are not the same skills that will make you profitable with 100,000. I've watched talented traders, I mean genuinely skilled people with solid strategies and years of experience, completely fall apart the moment their account size crosses a certain threshold. They can trade small with precision, they can hit 70% win rates on paper, but the second real money, life-changing money, is on the line, they hesitate, they overtrade, they revenge trade, they size down at exactly the wrong moment. And here's what's fascinating. It's never the strategy that breaks. It's the psychology. Today, I'm going to break down the exact mental shifts, the psychological transformations, that separate traders who stay stuck at small accounts forever, from those who scale into six figures and beyond. This isn't theory. This is what I learned losing $50,000 in a single week, and then rebuilding with a completely different mental framework. Let's get into it. The identity gap. Here's something I wish someone had told me earlier in my career. Your trading results are directly limited by your identity, not your strategy, not your chart patterns, your internal sense of who you are as a trader. Let me explain what I mean. When you're trading a $1,000 account, a $50 loss is uncomfortable but survivable. Your nervous system can handle it. You take the loss, you move on, you execute the next setup cleanly. But scale that same percentage loss to a $50,000 account, now you're looking at a $2,500 drawdown. Same percentage, completely different emotional response. And here's the trap. Your subconscious doesn't think in percentages. It thinks in absolute numbers. It sees $2,500 and screams, "That's a month of rent, that's a vacation, that's real money." This is the identity gap in action. You've scaled your account, but you haven't scaled your psychological tolerance. Your self-image is still that of a small account trader. I remember the first time I took a $5,000 loss in a single day. I couldn't sleep. I replayed the trade obsessively. The next morning, I sized down to practically nothing because I was terrified of another hit. And you know what happened? I missed 2 A+ setups that would have recovered the entire loss and then some. The problem wasn't my strategy. The problem was that I still saw myself as someone who trades hundreds, not thousands. So how do you bridge this gap? The answer is deliberate exposure. You have to systematically condition your nervous system to larger numbers before your account forces you to. Here's a framework I call the 10% stretch. Every month, increase your average position size by just 10%. Not double, not triple, 10%. This gives your psychology time to adapt. Your nervous system acclimates to slightly larger swings. Losses that felt massive become normal. The goal is to make your next level of trading feel boring before you get there. If a $10,000 day still gives you an adrenaline rush, you're not ready for consistent $10,000 days. Boredom is the goal. Excitement is a warning sign. The paradox of detachment. This is going to sound counterintuitive, so stay with me. The traders who make the most money are the ones who care the least about any individual trade. I don't mean they're reckless. I don't mean they don't respect risk. I mean they've developed what I call emotional neutrality. They execute with precision, but they're not emotionally invested in the outcome of any single position. Think about it this way. A casino doesn't sweat individual hands of blackjack. They know the math is in their favor over thousands of hands. Each hand is just a data point. Elite traders think the same way. But here's why this is so hard for advanced traders specifically. The bigger your positions, the harder detachment becomes. When you have $100,000 on the line, every tick feels personal. The market isn't just moving, it's moving your money. I'll tell you what changed everything for me. I stopped watching my P&L during trades. Completely. I covered that section of my screen. I set my stop, I set my target, and I looked away. At first it was agonizing. My hand would drift toward the mouse to uncover it, but after a few weeks, something remarkable happened. I started executing my plan flawlessly. No more panic exits, no more moving stops, no more cutting winners short because I was scared of giving back profit. The practice of not watching created the detachment I needed. Here's an actionable technique you can implement today. I call it the outcome fast, or for one full week. Don't look at your P&L until the end of each session. Focus entirely on execution quality. Did you follow your rules? Did you honor your stops? Did you take the setups your plan defined? Judge yourself on process, not profit. After that week, look at your results. I'd be willing to bet they're better than any week you spent obsessing over every dollar. Comment below if you've tried anything like this. I'm curious how many of you have experimented with hiding your P&L. Cognitive biases that sabotage scale. As advanced traders, we know about cognitive biases intellectually. Confirmation bias, recency bias, loss aversion. But knowing about them and actually neutralizing them in real time are completely different things. And here's the problem. These biases amplify as position size increases. Let's talk about loss aversion first, because it's the silent killer of scaling traders. Studies show that the pain of losing is psychologically about twice as powerful as the pleasure of gaining. When you're trading small, this asymmetry is manageable. But at larger sizes, loss aversion becomes paralyzing. I've seen traders with excellent track records suddenly become unable to pull the trigger on perfect setups because the potential loss was too large for their psychology to handle. They knew the setup was valid, they knew the math was in their favor, but their finger wouldn't click the button. The antidote is something I call pre-commitment. Before the market opens, I write down exactly what I'm willing to lose today, not hope to lose, willing to lose. I accept that loss before it happens. I've already mentally spent that money. This reframes the entire session. I'm not trying to avoid loss. I've already agreed to it. Now I can trade freely within that boundary. The second bias that destroys scaling traders is recency bias. This is the tendency to overweight recent events. You hit 3 losses in a row, and suddenly you're convinced your strategy is broken. You hit 3 winners, and suddenly you feel invincible. Both reactions are irrational. Both lead to disaster. The fix is obsessive data tracking. I maintain a spreadsheet with my last 200 trades, not my last 10, 200. When I feel my confidence shaking after a few losses, I pull up that spreadsheet. I see the full picture. I see that losing streaks are normal and temporary. The data calms the emotion. Here's a mental model that helps. Think in samples of 100. Any individual trade is just 1% of a meaningful sample size. It's statistically insignificant. Your job is to execute 100 trades with discipline. Let the edge play out. Stop trying to win every trade. Win the 100. Building unshakable routines. I want to end with something practical, because everything I've said so far is useless if you don't have systems to implement it. Elite traders don't rely on willpower. They rely on routines. Willpower is a depleting resource. You wake up with a limited amount, and every decision drains it. By midday, you're running on the fumes. That's when mistakes happen. That's when you revenge trade. That's when you break rules. Routines remove decisions from the equation. When your pre-market ritual is automatic, you preserve willpower for when it matters. Here's my personal pre-market routine, and I've refined this over 8 years. First, I review my trading journal from the previous day, not just the trades, the emotional notes. How did I feel? What triggered me? Where did I deviate from plan? Second, I identify my maximum risk for the day. I write it on a sticky note and put it on my monitor. This is my pre-commitment. Third, I spend 10 minutes in silence, no charts, no news, just breathing and visualizing clean execution. I see myself taking losses calmly. I see myself letting winners run. I mentally rehearse discipline. Only then do I look at charts. This might sound excessive, but I promise you, the traders who consistently scale into 6 figures all have some version of this ritual. It's not optional, it's foundational. And here's the other piece: post-trade analysis. After every session, I spend 15 minutes reviewing my trades, not to beat myself up, to extract lessons. I ask 3 questions, or what did I do well? What could I improve? And was there any trade where emotion overrode logic? This feedback loop is everything. Without it, you're just gambling with a strategy overlay. With it, you're systematically improving your psychological edge every single day. The danger of winning streaks. Now I want to talk about something that doesn't get enough attention. We spend so much time discussing how to handle losses. But honestly, winning streaks can be just as dangerous. I know that sounds crazy. How can winning be a problem? Here's how. After a string of wins, something happens in your brain. Dopamine floods your system. You start feeling invincible. You think you figured out the market. And that's when the real danger begins. You start taking trades that don't fit your criteria. You size up aggressively because you're playing with house money, right? You hold losers longer because you can afford to give some back. You stop doing the boring work that made you successful in the first place. I call this the winner's trap, and it has destroyed more 6-figure accounts than losing streaks ever have. I remember one month in particular. I was absolutely on fire. 22 winning trades out of 25. I felt like I couldn't lose. So I started breaking my rules. I took B- setups. I doubled my position sizes overnight. I stopped reviewing my journal because, hey, I was winning. 2 weeks later, I gave back 3 months of profits. All 3 months, gone in 2 weeks. Not because the market changed, because I changed. The antidote to the winner's trap is what I call success skepticism. After every winning streak, I force myself to audit my trades with extra scrutiny. Were these wins actually good decisions? Or did I get lucky on sloppy execution? Am I still following my rules exactly? I also have a hard rule. After 5 consecutive winning days, I take a mandatory day off. Not because I'm tired, because I'm too confident. That day off resets my psychology. It reminds me that I'm not special. I'm just executing a process. Stay humble in victory. The market has a way of humbling those who don't humble themselves. Building mental resilience for the long game. Here's something that separates professionals from amateurs. Professionals understand that trading is a marathon, not a sprint. And marathons require a different kind of mental training. You can have perfect psychology for a week, maybe even a month, but can you maintain it for years? Can you stay disciplined through market regime changes? Can you keep executing when your strategy goes through an inevitable drawdown period? This is where mental resilience becomes critical. Resilience isn't about never feeling negative emotions. It's about recovering quickly when you do. It's about bouncing back from a tough week without carrying that baggage into the next one. Here are 3 practices that have built my resilience over the years. First, physical exercise. I know it sounds unrelated to trading, but hear me out. Your body and mind are connected. When you're physically stressed, your decision-making suffers. When you're physically healthy and energized, you handle market stress better. I never trade on days when I haven't moved my body, even if it's just a 20-minute walk. Second, deliberate rest. I take 1 full week off from trading every quarter. No charts, no analysis, complete mental reset. When I come back, I see the market with fresh eyes. I'm sharper, I'm calmer, I make better decisions. Third, community ... Trading can be isolating. You're sitting alone, staring at screens, making decisions that affect your financial future. That isolation can amplify negative emotions. Having a community of like-minded traders, people who understand what you're going through, is invaluable for mental health. Find your people, whether it's a trading group, a mentor, or even just one trading buddy you can text when things get hard. You can't build a six-figure trading career alone. Anyone who tells you otherwise is either lying or hasn't done it yet. The ultimate mindset shift. I want to leave you with one final concept that ties everything together. The traders who make it, the ones who go from $1,000 accounts to $100,000 accounts and beyond. They all share one fundamental mindset shift. They stop trying to be right and start trying to be consistent. Think about that for a second. Most traders are obsessed with being right. They want to call the top. They want to predict the breakout. They want to prove their analysis is correct. And that obsession with being right leads to holding losers too long, averaging down into bad positions, and refusing to cut losses because admitting you're wrong feels like failure. Profitable traders have let go of that need. They understand that being wrong on any individual trade is meaningless. What matters is consistent execution of a proven edge. I stopped caring about being right a long time ago. Now I only care about one thing. Did I follow my rules? If I followed my rules and lost money, that's a good trade. Or if I broke my rules and made money, that's a bad trade. The outcome is irrelevant. The process is everything. When you internalize this, trading becomes almost mechanical. The emotion drains out of it. You stop feeling like a failure after losses. You stop feeling like a genius after wins. You just execute, day after day, week after week. That consistency is what compounds into life-changing results. So here's the bottom line. The difference between a trader stuck at $1,000 and a trader who scales to $100,000 is not strategy. It's not some secret indicator. It's psychological infrastructure. It's building an identity that can handle larger numbers. It's developing emotional detachment from individual outcomes. It's recognizing and neutralizing cognitive biases in real time. It's implementing routines that protect you from yourself. It's staying humble during winning streaks. It's building mental resilience for the long game. And ultimately, it's making the shift from trying to be right to being obsessively consistent. These are not glamorous things. You won't see them on social media highlight reels, but they are the things. They're what actually moves the needle. So here's my challenge to you. Pick one concept from this video, just one. Maybe it's the 10% stretch for sizing. Maybe it's hiding your P&L for a week. Maybe it's building a pre-market routine. Maybe it's implementing the success skepticism audit after your next winning streak. Whatever resonates most, implement it this week. Not someday, this week. And comment below telling me which one you chose. I read every comment and I want to know what's clicking for you. Tell me about your own psychological struggles in trading. What's the mental barrier that's holding you back right now? Let's start a conversation. If this video brought value, hit that like button. It takes 1 second and it helps more traders find this content. Subscribe if you want more videos on mastering the mental game of trading. I release new content every week, diving deep into the psychology that separates consistent winners from everyone else, and share this with a trading buddy who needs to hear it. We all know someone who's struggling with the mental side of the game. I want to leave you with this final thought. The market doesn't care about your feelings. It doesn't care about your hopes, your fears, or your financial goals. It's just going to do what it's going to do. Your job is not to control the market. Your job is to control yourself. And when you master that, when you truly gain control over your own psychology, Scaling your account becomes inevitable. It's not a matter of if, it's a matter of when. Remember, the market will test your psychology long before it rewards your strategy. Build the mind first. The profits follow. You got this. Now go put in the work. I'll see you in the next one.